One of the issues, I guess we could call it that, is that a lot of individuals might have with when buying or investing in stocks, especially popular stocks, and Apple is my example for today. I just wanted to talk about that, is how do we determine when it's overvalued? So I'm a massive fan of value investing through Warren Buffett and Charlie Munger, his partner. I'm a big fan of that when talking about fundamental investing, and often they would be looking to diversify away from stocks when the value has become quite high and overextended. So this kind of inspired me to record this, to talk about how do we is there a way visually that we can determine if a stock is perhaps overbought in terms of that. So not just technically, but visually. So I've got a daily chart here. I can see that the trend has now encountered some strong resistance, effectively at 27,000, call it 27,000. We've broken the previous low. So this daily trend is done. That's expired. Look at the weekly. And here I can see the kind of, basically as a guide, the moving averages here, the blue and the black, give a good indication of where value is. All right. There's also a previous level of resistance sitting at 22.5 or 22,000 in this area. But let's say if I had to draw a line at it, 22,500. Okay, so that was the last kind of area. I could see that this is an area where value is, at least on a weekly perspective. So it has run away. It does need to return to this area to find that sort of point of equilibrium. All right, so that's a good indication of it. But let's go higher up. We've had a bull market since 2009. We've kind of been trending up, 2010 at least. And the question is kind of, when are we overdue? We are due at some point in the next few years. We're certainly due for a bit of a correction. And if I then move up to the monthly, I can get a sense of, is price kind of overextended away from? So again, the 20 and 10, I will call that value. All right, so the question then being, are we overbought? Are we far away from true value? So true value is here. It's at the previous high, and so that's certainly not a bad indication of where a correction could lie. If I had to put it down to a round number, 20,000 works pretty well. Now it gets really interesting. Let's have a look at it on a quarterly basis. Let's get a sense of that. Now you can just see what I would highlight here is the sort of parabolic curve that's happening. We've also got a very large candle in place here, which is usually indicative of crowd volume. All right, and we've started to head away from the moving averages. Okay, so I mean, we know that at some point in the future we're going to have a slowdown, at least to give the market a bit of a breather. But that just gives you a sense of it quarterly. This is where we are. Certainly to have a comeback, this would be true value here. This is 20,000, so true value being here. So let me highlight this area on this time frame. There we go, 20,000 in that area. Certainly if you could see that it's come back to that area in the past. So 20,000 being not an unreasonable level for it to find some value there at that level, at the high point. At the low point, sort of call it 15,000. Okay, so if we had to do it from this perspective. If I then go even further and go to the yearly, all right, so now you can really get a sense of this. You can see it's never connected with the moving averages. It's never done that. It's got a massive candle, which is really big. And the previous one in 2018 was quite a strong rejection candle. We haven't followed through on that. We can see we've basically got a bullish outside all-encompassing candle. And this gives me a sense of this is pretty healthy. Overall, this is very nice and healthy. But what it has done is we've moved an incredibly long way away from the value at this point. Okay, so if we ever have a really big correction, we're going to find ourselves coming back towards this area, which is 10,000. So you can see it's sort of 10,000, 15,000, and 20,000. I'm more inclined personally to see 20,000 as kind of an area where I think we would be able to find support if there was a relatively a strong correction, similar to the one we had in 2018. Okay, but that gives me a sense here at least of an area, 15,000, 20,000, where it would potentially be able to come back down towards that. And I think the upper end would be 20,000, and I don't think that's unreasonable. It would still manage to maintain a lot of the uptrend if we had a correction similar to that one in 2018. And then we'd be able to find some support in this area and sort of start to head on upwards from there. So these are my thoughts regarding an example of when something has become overbought. When I get concerned, of course, is when I see it far away from these moving averages on the yearly, the quarterly and the monthly, and then you just know that over time that's going to be due for something to come back. And the first clue is usually when prices far away from these moving averages, and you start getting bearish, or at least red candles start to show up. Okay, so this is where it gets interesting. Again, we're in December now. We could have a similar impact towards sort of January, could hit a bit lower. These are hypotheticals at this point. I'm just saying what I do know from experience is red candles far away from the moving averages when price has been going quite aggressively. This will be interesting to see how we close this month. And then what happens in January as we break the low of that, then it'll indicate the price will come back to this. Now remember, if the trend is still healthy, price will come back just to the moving averages, back into the previous highs. And that's very normal, very healthy for it to do. What I'm talking about in this particular video is when we have a stronger correction, an overall market correction. And so this is when I would expect it to head towards that 20,000 and down towards 15,000 in towards this area. And again, the approach for that, the mindset to have is that's a good thing, because it means that in the following years the market will recover and then grow. So I'm not trying, this is not about the sky is falling at all. This is more about, is there a way visually to determine where value lies on a much higher time frame, on a longer term scale, to get a sense of how far away are we from that, and what would those potential corrections look like. And there's a lot of benefits to it. It does reduce the price. It does provide individuals who have an opportunity to then purchase those stocks or to buy in. It'll provide them with opportunities to do that because price will be discounted, much in the same way that property prices would drop in a very expensive area, allowing individuals perhaps to then gain access to properties there. So that is my commentary on that, my thoughts on that, and just highlighting those areas. And of course, as the price starts to come down, it gives more clarity on where it's likely to then focus on. But I thought that you may be interested in hearing my thoughts on this.